welcome to share it today. The topic for discussion is depreciation and accumulated depreciation. Let's understand what is depreciation, how to calculate the depreciation, and formula involved in depreciation. So, what do you mean by depreciation? Depreciation is a decrease in the book value of fixed asset. It's a systematic allocation of cost of an asset over its useful life. Let's understand this with an example. So in a company, suppose if you bought a fixed asset for 100,000, so value of a machinery is 100,000 and useful life is 5 and the scrap value is 20,000. So what is this 100,000? So whenever you are getting any purchasing any asset, the cost of the asset is 100,000. You paid 100,000. You have purchased an asset for 100,000. So in this company, whenever you are purchasing an asset, you have to specify how long you are going to use this asset, whether it is 5 years or 10 years. So that tenure is called as a useful life of that particular asset. And the scrap value, what is scrap value? Once the useful life is over, at the end of fifth year, what would be the value of an asset when you're going to sell that asset, how much you're going to get it? So that is scrap value, that is 20,000. So now with this taking these elements, let's calculate the depreciation. So how do you calculate the depreciation? Formula for calculating the depreciation is the cost is 100,000 minus scrap value. Scrap value is 20,000. Cost minus scrap value divided by 5 years. So that is 16 years. That means depreciation is 16,000 for an year. For a year, depreciation is 16,000 for a year. So now cost is 100,000. How do you calculate the depreciation? Cost minus scrap value divided by useful life. You got this 16,000. 100,000 minus 16,000. In the first year, you will deduct 16,000 as an depreciation. Okay. So in the second year, again you will minus 16,000. And third year, again you will minus 16,000. Fourth year, you will minus 16,000. And the fifth year, you will minus 16,000. So it's a systematic allocation of cost of an asset over its useful life. Useful life is 5 years. Cost is 100. Allocation is, systematic allocation is 16,000. So the scrap value will be 20,000. Hope everybody understood this formula, right? So what is book value? Cost minus depreciation. So this also you understood. This is cost and this is depreciation value. So the book value of that particular asset is 20,000. And here in this example, they have given us a scrap value. You can also calculate the depreciation using the percentage value if the percentage is given. Okay, so when the percentage is given, you don't need the scrap value. You can directly calculate the depreciation using 20% depreciation, 20% rate of interest. So what is accumulated depreciation? So you all saw what is depreciation. Okay, what is accumulated depreciation? Accumulated depreciation is the total amount of depreciation of company's asset. For example, in this below table, let's try with an example. You bought a fixed asset for 100,000 and the useful life is 5 years. So first year, second year, third year, fourth year, fifth year. So you bought a fixed asset for 100,000 and it is allocated in this 5 years. How did you allocate? Using this formula. Cost minus scrap value divided by useful life. So now in the first year 16,000 was the depreciation. Second year is again 16,000. This then the end of the year, second year, the total accumulated depreciation is 32,000. In the same way, on the end of third year, the total accumulated depreciation is 48,000. Fourth year, 64,000. And the fifth year, the total accumulated depreciation is 80,000. So that accumulated depreciation means the depreciation is getting accumulated in this particular account, which is accumulated depreciation. Okay, this is a contra asset. I'll explain this to you later. So now you have purchased an asset. You have booked that asset in the system. Okay, in the beginning of the year, you bought an asset. You booked that asset in the system. So accumulated. So the total depreciation is getting accumulated in this accumulated depreciation account. So accumulated depreciation is a contra asset, which I will explain to you later. So by end of the session, I'll have a Q&A session so that you can all engage yourself. Okay. So let's see. So now we have purchased an asset, book that asset in the system. So what is the entry for depreciation? How do you pass an entry for accumulated depreciation? So that is depreciation account debit to accumulated depreciation. So depreciation account is a profit and loss account, P&L account, which will show as an expense, and accumulated depreciation is a contra asset, which will get minus with the, suppose, see here, the cost of the asset is 100,000 and the depreciation is 16,000. So this will get minus with 16,000, which is the balance. The book value will be 84,000. Okay. So next, so since the depreciation is a P&L account, as usual, by end of the year, you have to debit the profit and loss account to depreciation. So what is depreciation? How the depreciation is charged? Depreciation is charged on what? Depreciation charged on non-current asset. And the question number 2, what is depreciation in simple words? So depreciation is a decrease in book value of fixed asset. Third question, how to calculate rate of depreciation? So we have already seen over here when I was explaining you, depreciation is equal to cost minus residual value divided by useful life. Question number 4, what is residual value in tangible asset? The amount of which you can sell your asset at the end of its useful life. That is called as residual value, or you can call it as salvage value or scrap value. Hope you enjoyed the session. Thank you very much. Let's grow together. See you.